Be Wealthy and Smart, episode 647.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why knowledge is wealth. And I've been talking about this a little bit on some other podcasts. I mentioned the George Gilder quote that I love, which is that wealth is essentially knowledge. And it is. And I just want to hit home on that today because recently some things have been just standing out more than usual, and I just felt like I wanted to share it with you. In this day and age, we are in this low interest rate environment where saving money just isn't paying people. Savings accounts are at 0.25% interest, 0.25%, and it's not enough to generate an income in retirement. It's not enough to really get you compounding at any high level and build wealth for you. It's really just sitting there making less than inflation, so it's actually losing value each year. And that's really difficult for savers in this environment. And that's why the knowledge about money and investing is more important than ever. Because look at it this way. With the S&P 500 up 25% year to date here in November of 2019, and the typical savings account paying 0.25% interest, it would literally take you 100 years in that savings account to earn as much as the S&P 500 has year to date. Isn't that mind-blowing? 100 years it would take to earn what the S&P 500, that is just an investment in the 500 largest growing companies in the U.S., has been up in the first 11 months of this year, 25%. That's crazy. And that is a huge wealth gap because for people that don't have the knowledge to invest, they don't have a choice. They're stuck in that savings account. They're stuck in those lower rates of compounding. There's really only 3 things you can do to create wealth. And it's the McT formula: money, compounding, and time. You can either add more money so you can save more, try to put more into your retirement accounts. You can compound at a higher rate, that is, get savvy with investing and understand how to get your money compounding and working harder for you. Or time, you can leave it invested for more years or work longer and retire later. Those are your 3 choices. Most people are saving as much money as they can, so trying to come up with more money doesn't really make sense. And nobody wants to retire later. Everyone wants to retire sooner, early, and not have to work as long. So that leaves compounding. And that means becoming a better investor, becoming more financially savvy, understanding how markets work, understanding how to invest, understanding how to reach those higher rates of compounding that I always talk about. Because it's not about taking an incredible amount of risk. It's not about trying to shoot for the moon. It's not about trying to find some individual stock that's going to be the next Microsoft or Google. It's really about the steadiness, the year in, year out investment returns that give you consistency. There was a billionaire that owned an insurance company, and my girlfriend used to work for him. And she used to say every year, he would just say, I want to earn my 10%. That was it. That was his focus, was getting his 10% every year, because he knew that at 10%, his money would double every 7.2 years. That's the rule of 72. The number of years times the interest rate is when your money will double. So at 10%, your money will double every 7.2 years. So he just wanted to get his 10%. That's what his goal was each year, was to try and get his insurance company to have a 10% return. Likewise, in the stock market, over the long term, the average annual return has been about 10%. Now, in the last 5 years, it's been better than that. It's been about 12.5%. But over the long term, generally people say the stock market returns on average about 10%. And if you're fortunate enough to get a 10% average rate of return, it can make a huge difference to you. If you had two people starting with the same amount in their 401k, $200,000, and they both had 30 years till retirement, and one put theirs in a 1% interest account of some sort, a bond account perhaps, that earned 1%. After 30 years, that $200,000 at 1% would grow to $269,569. The other person with $200,000, if they were able to invest and earn 10% per year for 30 years, they wouldn't have $269,000. They'd have $3.4 million. So you see, again, there is the difference, is not in the amount of money they started with, not in the time horizon they had. So the M and the T were the same. What was different was the C, the compounding rate, 1% versus 10%. So the knowledge and gaining the knowledge of how to do that is really what separates the people that become millionaires and billionaires from the people that don't. Because the people that don't learn how to do it and are having their money sit in the savings account at 0.25% are not going to get very far, because it literally would take 100 years for them to achieve what someone with knowledge about investing has achieved in 11 months. So those are some ideas I just wanted to share with you. So just some thoughts about wealth building and why knowledge is wealth. And should you decide that you want to do that at a deeper level and consider my private investing group, the VIP Experience, I would welcome exploring that with you and seeing if it's the right next step for you to make. Just complete the short questionnaire in the show notes and we'll set up a time to talk. I want to wish everybody happy holidays, and I want to also take this time to kick off another review contest. Between now and the end of the year, we're going to have some prizes. 10 of my Wealthy Mindset Blueprint audio sets valued at $197. 5 of my Wealth Heiress books signed by me and personalized for you. And 5 one-on-one wealth mentoring sessions with me. All you need to do is leave a podcast review on iTunes, or if you have an Android, on Stitcher.com, STITCHER.com. And your name will go in the drawing one time. And if you have read the Wealth Heiress book and you leave a book review on Amazon, your name will go in the drawing 2 times. And I will name the winners in early January. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.